Good evening, everyone. This is Gambell with simpleroptions.com, and in today's free video I wanted to show you some of the work that we've been using to dissect the S&Ps here lately and how symmetry can be a powerful part of your trading plan. The first part of this comes from and we'll actually start with the retracement of this swing high to swing low. Because as we have this, the sharp sell-off that led into the middle and the last part of last week, you kind of start thinking about a lot of things. Now we've covered the idea of the pit bull low, we've covered the idea that you have to have juiced up premium to sell that into a monthly expiration. So that's kind of what that move was, I think, in most people's minds. Okay, now that we're through that, we're trying to determine, are we getting ready for another shove up into new highs? Or is this a bigger, more serious correction, and we should get prepared for that push to the next lows? Well, this is simply retracing that first bit of the sell-off, and should still be considered a viable point of resistance. So I've got that right there, about 42.5 in the S&P futures, and then knowing that that comes from an area of resistance, that's where then you can drop down into a smaller time frame chart. The 39 shows this one pretty clearly. And then just start looking at previous swing lows to swing highs and their relationship to what you're going through on an opening morning. I use this to try and get myself to not buy up at the highs, and that's exactly what we saw on this move. So all we're saying is, knowing that we failed from a 618 retracement, we still need to be a little bit questionable of the move. Then taking the previous swing low to swing high here and comparing it to the swing high that we were opening up to here, you can see the significance of that. Now, with that being said, you can also flip this and do this in just the inverse. So take that exact same tool, and depending on what time frame you're trading, in this case we're looking at the 39-minute chart, then start looking at the declines that have preceded the rally to start finding areas of support. As these start to cluster and create better areas or confluences, that gives you better places to make your decisions against, and it is a very helpful tool in taking one decision into the next. So that was a big part of what we used at the beginning of the day. Obviously I'll be running more intricate levels as we get into tomorrow's session, but hopefully you find that helpful in your trading, and we'll cover more of it in the next free video.